Hello and welcome to ET Now. You're watching IPO Central, and my guest today is from GK Energy. It is India's largest EPC services provider for solar water pumps. The company's IPO is opening on September 19th, closes on 23rd. Price between 145 to 153. It's a fresh issue of 400 crores and OFS of 64 crores, and the company is valued at little over 3,100 crores at the upper end of the price band. And joining me is Mr. Gopal Kabra, who is the CMD and CEO of the company. Mr. Kabra, thank you very much for joining us today on ET Now. To begin with, sir, you are one of the largest EPC services provider. Give us a sense of the kind of market that you are in and what the services that you provide.
Yeah, first thanks for your invite, and we are the one of the major player into the country for the solar agriculture pump. So this is a very vast market where we are serving. So if we talk about the total, we have 11 crore plus farmer in the country, and out of that around 3 crore farmer has been able to get the source of the power for the water pumping, and remaining is addressable market. So we are addressing the same market where we can provide the decentralized solar agriculture pump to the farmer, and they can utilize their well fertile land for the crop.
How do you select the farmers? Do they come to you for your services? Because my understanding is that the government schemes are there for this particular segment. I think PM Kusum is one of the schemes which is there. So how do you work with the farmers and the providers of solar water pumps?
See, it's a completely market mode thing. So farmer have the right to select the vendor. So farmer do select the vendor as per their choice. So it's all depend on the what brand value you have created down the line in the last decade or 5 years or 3 years of your working in the segment. How you are giving the service, how your product is providing the best output, water output, is everything is based on that, because farmer is doing their own contribution. So they are very much selective while selecting any company, because price what we are serving as a whole industry, it's remain the same. So farmer have the wonderful choice among the all available players, and they do select on the basis of services and the previous track record only.
Are you also linked to the OEMs as well, who provide solar powered water pumps as well, at which so that you go as a combo to the farmers?
Basically, we get product manufactured in our brand name. We have co-BIS for the solar module, and we take the solar pump, motor and the controller in our brand name, right? So this way I'm connected. Down the line, farmer have everything in our brand name, and for every product we keep multiple vendor to supply in time. So our target always remain to get the product delivered to the farmer well in time. So we keep multiple vendors. So this way I'm associated with the multiple OEM supplier of my industry.
Can you also give us a sense of the how big is your operations with respect to how many motor pumps that you can manufacture or assemble together and offer to the farmers as well?
See, here I would like to to come with the numbers what we have done in the past and what we have done till date. So if I am talking about in the PM Kusum, we have installed 62,000 plus pumps, and apart from PM Kusum, we are available in the market for the state schemes like Magiltala Solar Krushi Pump Yojana in Maharashtra, where also we have almost contribution of the 17% of the allocation in total size.
Can you also give us a kind of idea of the kind of order book that you're sitting in, because these are tenders which have been so you go directly to the beneficiaries of PM Kusum, and farmers can also come directly to you as well in that sense. So can you give us an idea of what is the kind of order book that you're sitting on?
Okay, so if I'm talking about the order book, around 42,000 pump order book, I'm right now sitting on 15th August in the current year, and 16,900 pump we have already executed at the end of the July. And here the process is like we all player get empanelment with the one of the order issuing authority, and the farmer also come to their website. So it's a completely digitally created market where farmer do apply on the portal with the given SNAs, nominated SNA, where their all document and everything get verified. Once it get verified, they find out as a eligible farmer to take the benefit. Then this phase 2 arrive where the farmer do make their contribution. Then phase 3 arrive where the farmer do the vendor selection. That time our picture, we come into the picture. This is how the complete our market moves, and then we do the supply, installation and the services.
How does the margin vary in this segment? If I can look at it, it's around 18 odd % for you in FY25, and it has gone up over the last 1 year. Especially if I look at FY25, it was a more of a consolidated number that came into being, and I don't have the consolidated for the previous year. So how is it looking actually?
See, margin has been going good because of the volume. Everything run with the volumes. So volume has been increased. If we talk about the growth, what we have taken. So few years back, we were at 10,000 plus pump annually, where we have reached March 25 with the 45,000 pump. So you can see that volume has been grown from 1 to 4.5 times, right? And margin, another reason for the having the good margin, because we are the purely EPC company. So EPC with the sundry material contribute around 32% of our total BOM, or the selling cost, whatever you may consider. And this gives one of the strongest advantage to us. That's why we are able to have the good margins.
Can you also take us through the kind of working capital requirement, because you are raising a lot of the large portion of this money is going to be used for long term working capital requirement. What is the normal working capital requirement here? Since you said yourself that there's a agency which is giving you the orders, and the farmer comes on a digital portal and then he makes the payment. So what is the normal timeline for receiving the payment back, and why do you need such high working capital requirement?
We are not the asset heavy company. We are not in manufacturing space, our own. So we need whatever the money is for the working capital only, because we have to procure the material from the various suppliers. And talking about the working days, then my net working capital cycle is 90 days as of now.
Okay, and why do you need such high 90-day working capital, since you are not an asset heavy company?
90 days, because we have reduced the timeline to pay our vendor. So as our volume is growing, we want to take the more better price with our vendor. So earlier payment term was little bit higher. That has been reduced to 15 to 20 days of the payment terms to the vendor. So that's how my net working cycle it's coming to 90 days.
And how does the receivables look at? I mean, what is the normally receivable days that you have today?
Receivable, if you are talking about, then it's very good. We are able to do the business because the receivable is quite good to us. And if I talk about in the numbers, so we have to go for the 2 financial years. March 25, my outstanding was 150 crore rupees, where my total business into the March 25 is 1094 crore. With GST, it's approx we come to the 1400 crore of receivable. Out of that, 1096 crore I have received in my books in the direct bank account, and the remaining I received in term of the GST and ITTDS. So total 1040. Sorry, I said 996. I have to tell. So 996 I have received, and remaining in GST and ITTDS. So my out of this 1400 crore rupees, 360 crore is only outstanding. I have been in the March 25, where my last quarter business was 400 crore plus. So you can see that my net working days are 90 or less than 90.
But you know, it's really 36% of your top line, if I'm not wrong, your receivables, 32% of your top line. Is it possible to bring it down further? Because it's a asset light business that you're carrying. So even 30% is of your revenues is also a very high number for you.
See, 30% annualized basis we have came. That's why I've mentioned earlier 411 crore rupees business we have did in the last quarter of last financial year, and my outstanding is 360 crore only. So it's, and we definitely will try to optimize our process, but more or less 90 days would be the cycle for the receiving the payment. And quarter four generally goes higher because the water requirement of the farmer goes up. See, we are into the solar agri pumps. So farmers majority need arrive November, December to it goes up to March, April, May. That's a peak period for the farmer to have the more water. So that's time we get the more selection, and that's why our more business run into the that quarter itself. And as per Indian accounting policy, March is the closing. That's why we see like this. If it would have been December to January or January to December, it would not have reflected like that.
Okay. Mr. Kabra, final question. Has the GST changes impacted in any way your, the demand, or has it deferred some of the demand because of the GST which is now coming into effect from September 22nd for you?
See, ultimately it doesn't affect for the solar agriculture pump because the pricing is basic price and GST goes at actual. So that is the for my selling side of thing. But wherever the private market is there, wherever the rooftop and other businesses are there, definitely it's going to attract more business. People, they are going to reduce almost 5% of the cost. So I believe this will boost the solar economy completely in India.
Mr. Kabra, it was a pleasure talking to you today on ET Now. Your IPO is opening on 19th, closes on 23rd. It's priced between 145 to 153 rupees per share. It's a 464 crore issue, and it values your company at little over 3,100 crores. Thank you very much for joining us today on IPO Central and being on ET Now. Thank you.